Okay, we are being live streamed.
All right. It's like we're movie stars, huh?
Yeah. And then I'm going to start the webinar and let people come in. And when we get a few people in, I'll start my slides.
I'll keep myself on mute until I'm ready or until you give me an
Okay.
intro. Thank
Okay.
you.
Good afternoon to those of you who are just signing on. We're going to wait a couple more minutes until we give more people time to log on, and then we will get started. The webinar this afternoon is making your plan bankable. So if that's not the one you thought you were coming to, you might be in the wrong place, but hopefully you'll be in the right place. This is a really, really good session. If you are thinking about going to get any kind of a loan, this is going to help you a tremendous amount. Okay. We're going to wait 1 or 2 more minutes. While we're waiting, I would point out to you that if you have questions or comments, they can go in the chat or they can go in the Q&A. We will be monitoring those. Also, you will be getting a link to the recording and also a copy of the slides. So you don't need to take notes. You can relax and enjoy the presentation. So I'm going to get started. My name is Anita Kayat. I am a mentor in the Cleveland chapter and also chair of the webinar committee. I'm happy that you're joining us today. I'd like to tell you a little bit about SCORE before we get started with the actual presentation. SCORE is the largest network of free volunteer small business mentors. There are something like 10,000 of us across the country. So no matter what your business is or what stage of your business, if we in Cleveland don't have someone who can help by mentoring you, we have access to those 10,000 other mentors and can certainly find one who would be satisfactory as a mentor. Our mission is to foster vibrant small business communities. We do this through mentoring and education. And we hope that you as a small business owner will have all the support and resources you need to be successful. Small businesses drive our national economy and certainly our local economy as well. You create jobs and build wealth for the community. So we know that you are critical to the success of our area, and we appreciate the fact that you're willing to spend the effort to be a successful small businessman. These are some of the statistics for our last full year. We helped to start 500 new businesses. Note that we are comprised of 7 counties all along Lake Erie, from Ashtabula on the east to Huron on Erie County on the west. So a big area. Our work is supported by the Small Business Administration, so we don't charge for our webinars. We're also supported by a number of organizations that support us in order to help small businesses be successful. Just a reminder that in September, on the 12th of September, at the Holiday Inn in Independence, we're having a networking event for SCORE clients. And so if you register, you can come and meet other SCORE clients as well as score mentors and have an opportunity to tell us about your business and get involved with like-minded entrepreneurs. This is a shot of our website. If you go there, you'll find a lot of resources under local resources, blogs, articles, templates, all sorts of things that will help you with your business. You can also take a workshop. There's a list of all the upcoming workshops. You can register there, and also recorded webinars like this one today will be on our website within the next week. So when you have a chance, go to our website and find all the wonderful resources that are available to you. And now I'm going to stop sharing, and I'm going to turn you over to John Kopf, who is the president of Growth Capital, and is going to give us all some fantastic information. So making your plan bankable. So it's all yours, John.
Thank you so much, Anita. I appreciate the opportunity to speak with the group today. I think you got my screen here, right, Anita? No?
Yes, perfect.
Okay, alternative financing options, SBA Community Advantage loans, correct?
Yes.
All right, fantastic. Well, welcome. We're going to talk about some different ways of financing your small business, especially through SBA's Community Advantage program, and tips in how to make that application a little bit easier for you. What lenders are looking for, what SBA requires, and how it can help your business. So we'll take a look at some of those options for us. Just a little background on Growth Capital. We are a private, not-for-profit economic development lender. We've been around since 1982. So celebrated our 40th anniversary last year. We're almost as old as SBA, not quite though. But we've been the #1 community advantage lender and SBA 504 lender in Ohio for quite some time. Last year was a good year for us. And what we do, okay, in providing alternative financing through our SBA programs, is we bring a little different twist, a little different flavor, if you will, as a mission lender as opposed to a bank. Okay. SBA loans are certainly not a lender of last resort. These are commercial grade loans. Their small business size limits have increased considerably. So while we can still make a $25,000 loan to a company with $100,000 in revenue, we can also make a $5 million loan to a company with $50 million in revenue. So size standards have increased considerably for SBA over the years. It's not a government loan. You're not receiving a loan from the government. An SBA Community Advantage loan or a 504 loan is a loan provided through SBA or provided through Growth Capital and guaranteed through SBA. Borrowers and banks work directly with Growth Capital and not directly with SBA. I don't know if any of you companies had an EIDL loan out there at any point in time over the last 2 years. It can be a little difficult dealing directly with SBA. So with these loans, you don't need to do that. Okay. One of the things that we found, especially on some of these small business loans, is that small companies find it very convenient and accessible to obtain what are called fintech loans. Okay, these are online lenders that usually charge very high interest rates, APRs in the 80% with daily repayments sometimes that really eat borrowers' cash flows. And while they are certainly money available when needed, many times they are very high cost loans. So some alternatives to that. So what is a community advantage loan? It's nothing more than a standard SBA 7A guaranteed loan that any bank would provide, except it's provided through nonprofit lenders like Growth Capital. There are well over 100 across the country. We handle all of Ohio, focused certainly on underserved markets here in Northeast Ohio. But the loan sizes range from $25,000 up to a maximum just recently increased from $250,000 to $350,000. And we hope in the next fiscal year ahead that SBA actually increases that size limit even more above the $350,000. The rate is currently maximum of prime plus 6.5. Okay. These loans, while higher than a bank rate loan would be, are again considerably cheaper than other types of credit card financing or again fintech financing. We are required to focus on underserved markets, and management and technical assistance is provided through partners such as SCORE. So what can we use this for? It's any eligible business. It's got to be a for-profit business. Okay, it can be manufacturing, distribution, wholesale, commerce, service companies. It can be retail. Okay, it can be B2B. Any type of for-profit business. Okay, and the use of funds are for any eligible business purpose. That's for commercial real estate. Must be owner occupied. Okay, at least 51% owner occupied. Okay. As long as or as well as funds for plant expansion, facility expansion, equipment, furniture, fixtures, leasehold improvements. Can also finance working capital or inventory. We can do debt refinancing, business acquisitions. We find that this is an excellent tool in the small business market for business acquisitions. When the acquisitions are less than $500,000, we are able to finance those acquisitions where many times banks are just not interested in business acquisition transactions that are that small. Again, the community advantage loan is not a loan of last resort. Okay, the best way I like to describe it is the just miss bank loan, right? And here's why I say it's a just miss bank loan. And some of you may have experienced this already in your experience with your business. Okay. But many times, especially very small businesses just starting out, right? These are some of the issues that may cause them to be not bankable. Their personal credit score may be lower than what banks require. They may have limited personal liquidity. They may have limited personal net worth. They could just be simply a sole proprietorship with no corporate filings. They could have very limited business revenues. They could have a very small and limited balance sheet with very little assets. They could have tight cash flow, and they could have very limited collateral. These are many of the hurdles that a small business applicant at a bank, even with an SBA loan, is going to encounter. So how does the community advantage loan provide a solution? Okay, so lower personal credit scores are acceptable under the SBA community advantage loan. Okay, there are no FICO score cutoffs, right? Many lenders will have if you don't have a FICO score of 680 or higher, they can't approve you. Okay, we're not in the same requirements as the bank lenders. Okay, so there is no cutoff. We cannot take previous bankruptcy filings. If an individual has filed bankruptcy previously, we are not able to make that loan. Okay, but it does allow for lower credit scores, and in many cases, when a small business owner is just starting, okay, the struggles may be a late payment here or there, right? And it may affect their score, or they may have borrowed a bit to get started already. And again, it may have affected their score. And banks have very stringent guidelines when it comes to FICO scores and loans. We don't have that, so there's a little more latitude in personal credit histories. Personal liquidity sufficient for living expenses and working capital. Okay, so we're able to look at a small business applicant from a global perspective. Okay, and just because they may not have any current business cash flow, they may have a sufficient personal income to cover that debt. Okay, so we look at it from a global perspective. And we require that there be no net worth, where many lenders may. Again, sole proprietorships financed from Schedule C income. We look at a global cash flow, whereas again, many bank lenders they'll see the income from the business, the cash flow from the business is not fully sufficient to cover the cash flow. We can look at the assets and the income of the owners as well. Negative net worth again is okay. Tight cash flow coverage. Okay, many banks have requirements of 1.25 to 1.5 times cash flow coverage. So for every dollar of debt that you have to pay right every month, you got to have $1.50 of cash flow to cover that, right? Well, the way that we're able to look at it is much lower. As long as we have at least 1 to 1, you have $1 to cover every one. Okay, again, there's more latitude. Our collateral coverage, while we are required to take collateral on loans over $50,000, we do not need to be fully collateralized. So collateral shortfall is many times a big obstacle to small business loans. And SBA Community Advantage does not require the loans to be fully collateralized. So some of the reasons, why a borrower would choose to take a Community Advantage loan as opposed to, using their credit cards, right? Or taking a fintech loan, or maybe even just taking a bank loan. Okay. There's a couple of big advantages here. With timely payments, the borrower is able to build a solid credit history. Okay, and that includes for the business as well. All the borrower payments are required to be via bank ACH, so it's you never forget a payment, right? All of our loans are on 10-year amortizations with lower monthly payments. Normally, if say you did a $50,000 working capital loan at a bank, they would probably put that loan on a 3 maximum 5-year term. Okay, all of our loans are on 10 years. That same $50,000 loan would be on a 10-year term, so the debt service would be much lower. Okay, even though the interest rate may be a little bit higher, okay, the debt service payments are going to be much lower. Okay, on a 10-year term. We also have the ability to offer deferments when appropriate. So, and we did that did that quite a bit in the last few years when companies that we had made loans to experienced some difficulties through 2020 and 2021. And again, we can connect borrowers with TA sources like small business development centers, which we have here in the Cleveland market, as well as our friends at SCORE. There are no prepayment penalties on the Community Advantage loan, so you can take a 10-year term, pay it off in 2 years, and there's no prepayment penalties. Another reason that our rate is slightly higher than a bank is we really want you to go back to a bank and refinance. We have a very limited capital structure. Okay, so every loan we make, we want to get that loan repaid as soon as possible so that we can relend those resources to another small business borrower. And we do work with bank lenders to refinance our CA borrowers directly. Matter of fact, we got a payoff on one just today on a loan that we did about 2 years ago. At the time, they were not quite bankable. Bank actually referred the borrower to us when they were required to decline the loan. We were able to do that loan about 2 years ago, put the business in a really good position, and they were able to go back to their bank who had to deny them 2 years ago, and they were able to refinance our Community Advantage loan with a bank SBA loan at an even lower rate. So that was very helpful for them. So what kind of businesses are we doing? These are very standard type companies that we've financed over the years. Fruity Cakes was a small bakery. that utilized a community advantage loan several years ago. Neighborhood restaurant Miller's in Manaway. So we get out to the Hinter regions as well, not just Cleveland proper. Extreme Marketing was a service company that we did. Again, service companies don't have very little in the way of assets to pledge as collateral. We're able to make that loan, again, very under collateralized. And I'm sure you're familiar with Great Clips, right? We could do franchise loans as well. So those are some of the types of businesses that we've been able to finance over the years with our community advantage financing. So that's a whole lot I give you in just a short time, okay? But what I want to do is open it up to any questions, and as well, Anita, any questions that you might have for me.
Okay, well, I have a question that
Yes.
I have a lot of clients who want to do group homes.
Hmm.
And a lot of them don't have, they may have a house that they want to turn into a group home. And they don't have a lot of money to invest. What are your requirements as far as how much money they have to put in order to get a loan?
Sure. Okay, so SBA's requirements are any company, any business that's been operating less than 2 years. Okay, any business that's been operating less than 2 years, no matter the project parameters, okay, whatever those total project costs are, the borrower must have at least a 10% cash equity injection. Okay.
Okay.
So if they're looking at a property for a group home and the cost is $100,000 to purchase, and they need to do $10,000 in renovations to get it up to code, it's a $110,000 loan. Okay. They need to be able to put $11,000 cash down.
But if they already own the home,
yes, if they already have
use that
yes,
as collateral.
correct. Yes, and as long as there's at least 10% equity, okay, into the project, that's the important thing. They got to have 10. If the business is less than 2 years in, if it's a $50,000 loan they want from SBA, they got to put $5,000 down, and they'll only get 45. Okay.
Okay.
So SBA requires any business with less than 2 years of operating history to make at least a 10% equity injection into the project.
Good. Good. Thank you. Let's see what we have here. Will this loan affect me applying for a mortgage?
Only in that it would result in an inquiry into your credit history. Okay, that would be the only way it would affect if you're applying for a mortgage. Okay. I will tell you that one of the negative impacts on a FICO score, okay, or any score, is the number of inquiries. Okay, so if there is a unusually large number of inquiries, then that does adversely affect an individual consumer credit score. Okay. So if you're shopping around and making applications to, I remember years ago, my wife came back from a trip to the mall with all these little trinkets. Oh, look at what they gave me for applying for a credit card. Oh, look at this. They gave me this for applying for. Well, she had about 10 inquiries in her credit that weekend, and it probably dropped her score by about 50 points. Okay. Mm-hmm. So yeah, that would be the only, it would be very minuscule with one inquiry. One inquiry in over a short period of time does not have an impact, but 6 in a short period of time does.
Now, I noticed that you had funded franchise.
Yes.
Do you have any limit on what you would fund as far as a franchise?
No, as far as eligible project, I mean, we can finance the actual franchise fees. Okay, mm-hmm. we can finance the cost to secure all the training, right? All the equipment, okay? Any build out that's required that the franchisor would require. And SBA has changed the franchise review process. Okay, so it's not as onerous as it was in previous years to obtain the approval of the franchise itself. Okay. Unfortunately, not all franchises are eligible for SBA financing, but most are. And we've done a number of franchise businesses with our community advantage loan, as well as with our SBA 504 loan, which is strictly commercial real estate. But the community advantage loan, yes, it's worked very well for small franchises.
Oh, okay.
And many times franchises are it's the most cost-effective way and the avenue to market entry that has the lowest barriers, right? So it can afford a budding entrepreneur a possibility to enter a business model with a little more backup than they may if they're striking it out completely on their own.
Okay, but still, again, because it's a startup, you would require 10%.
10%.
Yep. Okay. So let me see if there's another question here. Oh, how does this loan affect business taxes?
Sure. Well, it's the loan would be reported on the company balance sheet, okay, as a liability, okay. And the interest on the loan is a deductible business expense. Okay,
Right.
I'm no accountant. Okay, no CPA here, but interest on business financing is a deductible expense. That would really be the only effect it would have on a business tax return. One, that the debt is reported on the balance sheet. Okay. And that two, that the interest is taken as a business expense.
Okay, well, I don't see any other questions. Again, we will be sending out a link to the recording and a copy of the slides. So if you have any questions that you want to follow up with John, you have his contact information. And I'm sure he'll be happy to answer your questions. So anyway, thank you all for taking the time to come and listen to our webinar today. And John, thank you very much for providing that information. I always learn something when I sit in on these. So that always helps me in mentoring my clients, and I will be, I'm sure, referring some people. So
thank you so much.
Thank you very much, and everybody enjoy the rest of your